So why don't you explain to people why you think that the value sector would benefit from this change, and maybe tell us why you think they haven't figured it out yet?
Well, I think it's everybody's a prisoner of their own biases and a prisoner of the most recent past, and heuristically we all overweight the recent experience the most.
Okay.
Our brains do that.
Right.
So it's this. You can read the behavioral finance literature. I mean, just look up recency bias. That's what it is. So we're all looking at the past 10 years, and I think the assumption is well, once we get through this COVID, we'll go right back to the period of time like the last 10 years.
Right.
But what I'm saying is the last 10 years were an anomaly for a lot of reasons. We did the wrong kind of economic policy, and we had to really delever. And I'm not talking about government delevering, because they're totally different. I'm talking about the individuals, the private sector, which these are the ones that matter.
Right.
And because the governments can print it, and banks. So, but today everything's different. Banks are healthy, consumers are healthy, and by the way, we're not doing that. We're not doing austerity. We're doing the opposite. We're doing stimulus. And people think, well, we're going to go back to this sort of secular stagnation framework. I just think that's wrong. It just feels to me like we're in a much different environment. And because our supply chains were built for this slow period of time, we have to completely change our supply chain. So imagine the guy that's providing supplies to the home builders on a 900,000 run rate. And suddenly this year they say, well, we need 1.5 million houses. And you're like, well, that's going to take some time, right?
Yeah.
And think about that throughout the entire economy. Think about that with ships, with container ships, and with steel, and with aluminum, and all these different commodities. Oil, energy. We're going to build a brand new green energy infrastructure? Great. Well, that's going to take more energy, not less.
That's right.
Because we have to use the energy we need to begin with to continue to sustain life. And then it's like growing. Like when you're growing, you eat more, right? You're a growing kid, they all eat a lot. Yeah. Well, if you think about that with the energy infrastructure, you have to use more energy to create this new thing.
That's right.
In addition to sustaining yourself, right, to get to that point, right? So it feels to me like it's very reflationary. And that, if you think about that kind of environment, that's traditionally benefited value. And it's a higher growth environment than we've seen for a while.
Right. Now, you talk to a lot of smart people and a lot of the hedge fund managers and endowment guys. I think one of the things that we've discussed is their reluctance to jettison their top 8 technology stocks. The fact that they've owned the Googles, the Amazons, the Facebooks of the world, and it's worked for them, and they're still stuffed to the gills with it. Do you see any signs of that changing? And when do you think that trade might finally start to hurt them?
Well, I think people that own those, if you own those and if you're in the long only community, you're paid on relative performance, and that surely means you're measured versus some index. And because the indexes are so heavy with those, it's very difficult for you to underweight those if you're competing against that index. I mean, because the indice, it's just too much.
Right.
We have an expression in our shop: the world is short gamma. Right. If you think about how long-only managers, most of them are paid. They're paid on a relative performance benchmark. So, not surprisingly, that's what they care about.
Right.
And so, when they're thinking about Google and Apple and Facebook and all the names that are in this list you mentioned, or I assume that's what you're talking about. The technology names.
The top 8.
The top 8.
And actually, someone pointed out to me that the 9th is Berkshire, and it has 40% Apple. So it's almost
there you go.
It's almost the top 9.
And by the way, it's the largest component of the XLF, which is interesting. So you don't know if you're buying the XLF, you're actually buying Apple.
I did not know that.
It's the largest component. People are like, oh, I'm going to buy the banks, I'm going to buy the XLF. Well, look who's the top. But at any rate, it's a good question. My sense is they're not going to do it very quickly. If it happens, they're going to be drug out. I just think it's too much career risk for people to say, I'm going to just. Even if they should do that, it doesn't mean they can actually do that based on the way they're paid.
But one of my thoughts when I listen to you, and your first instinct might be, Mike's real bullish. This, lots of growth coming up in the next decade. That means you should buy stocks. But one of the worries is that if you buy the broad market, you're going to be getting a lot of the stocks that have benefited from this previous slowflation,
Right.
right? And one of the things that you laughed about, you said, I feel like I'm just a bond trader at heart. And I do worry about that, the fact that those technology stocks are in essence the longest duration asset out there.
Yeah.
And
Yeah.
that people are positioned in the most heavy, the longest duration. It's almost like they're, chasing yield, the fact that the interest rates are way down, and instead of just accepting the lower rates and waiting for higher rates in the future, they're going out and saying, I'm going to go with 30 years.
Yeah. I think, in regime change, it takes a while for people to understand what's going on. I just don't see them moving very quickly to move
Right.
out of those names.
So sorry to interrupt. You say it in regime change. What would be an example of something that would change your mind? Like you've laid out a very compelling case about where we're headed and stuff. What would be this something that would give you pause and say, "Hey, maybe I'm wrong about this"?
Well, I think if suddenly we just did a full reversal on our political economy, if we said, we're going to quit deficit spending, and we're going to try to just,
Like a Tea Party return.
yeah, something like that, something, anything that really if we said, we're not going to spend any money and we're going to hike taxes just to make sure that we can balance the budget, that's a whole different issue. I mean, I think that'd be a big depressant. I don't think that's politically likely from either party.
Okay.
At this point, because all of them know that it would likely cost them the next election. So because they know that spending money, helps.
Right.
And so my sense is that's unlikely, but it's certainly possible.
Right.
And you could say, well, what about the rate of change if things really slow down? And I think you may have alluded to that a little bit earlier. I'm less worried about that because of the sort of the lingering effects of what we've done so far. And I would say something else too, which nobody talks about, but I think it's very important. And that is that we all know collectively, market participants, about monetary policy and how it works and so forth. Well, all of us know very little about this kind of fiscal policy.
That's
we
true.
know very little about its effects on the intermediate and long term. We just don't know.
Yep.
No one really knows. Stan Fisher, who's, former Fed vice chairman, made a comment a few years ago, and he said, we know how to stimulate the economy. And he's talked about fiscal a lot.
Right.
We can do fiscal and have the Fed monetize it. That works. We know what we need to do if we need to. He said this in 2018.
Okay,
So
before
it's
COVID.
Before COVID. So,
Yeah.
it's not surprising that we did this playbook.
Right.
Right. Because, thoughtful people at the Fed had talked about it, and thoughtful people at Treasury had talked about it.
Right. Okay.
And by the way, this was a bipartisan thing that we did.
That's right. We forget that, but everyone agreed. Yeah.
Everyone agreed. We've got to do this.
Yeah.
This is a situation where you've got to spend money. And so all the deficit hawks and all that, they put them in a room somewhere and said, don't come out. Anyway, so but they also said, but we don't really know if we create inflation through that process, we don't really have a rheostat. We don't really know how to turn it off.
That's right.
Right? It just sort of persists, right? And
Yeah,
so
I completely agree.
and that's an issue, right? We
Yeah.
don't. And is that bad or good? I mean, I would argue that some inflation is actually pretty good. We really need it
Right.
in some ways. So especially after the sort of the deflationary decade that we just had. I mean, that's not helpful for broader society.